auto slowdown has taken the wind out of auto ancillary players as well. No surprise then the GNA Axle, with supplies to players like TAF as well as Eicher Motors, saw its revenues drop in the quarter gone by. After actually a pretty decent quarter two, quarter three has been a bit of an issue for the company. But will the transition to the new emission norms provide the much needed bump up this year? And will the agri division see an uptick as sowing increased in the Kharif season? Let's put that question across to Mr. Ranbir Singh. He's the president and CEO of the company, joins us right now from Chandigarh. Mr. Singh, good having you. Thanks for joining in. You have to admit that after some bit of promise shown in quarter two, wherein despite the sluggish environment, you had market share gains, that seems to have died down a little bit in quarter three.
Neeraj, good morning. Thanks for inviting me. This Q3 is really affected our top line and bottom line also. So actually, earlier, more than a year, the domestic CV market was down, and even this year, off-highway market as a tractor market is going minus by 13 to 15%. And suddenly, this in Q3, North American market has not supported us. It has gone down by 38 to 39%. So definitely, it has affected our Q3 results.
So what's the sense like? I mean, is quarter three a one-off, Mr. Singh, or is it difficult to predict that? And two, if indeed this sluggishness lasts, will it continue to have impact on the margins? Because that's the other factor this quarter, isn't it, Mr. Singh, that the EBITDA numbers and the EBITDA margin numbers have come off quite rapidly?
Yes, actually in Q3, whatever work in progress we have used to produce the goods, the buying was expensive. So wherever our sales prices for North America and European market, those were fresh prices, those are with the lower pricing. So it has affected our EBITDA margins. But this can improve. This is a temporary phase. This can improve in next 2 to 3 quarters as the old expensive inventory will be consumed. And as so far as top line is concerned, we have no hope in next 2 to 3 quarters any improvement because of all segments from domestic, Europe and US is down.
That was what I was going to come to. Your export business grew about 58% YOY in the first half. And has it deteriorated so much in quarter three that you're not sounding optimistic about the exports business either?
Actually, in Q1 and Q2, we were having a lot of spot and orders to fill the requirement of our particular customers. Those requirements were completed in first 2 quarters. But in quarter 3 and 4 onwards, it's a normal requirement, which is because they are consuming 38% less than their previous quarters. So that's why this reduction in the top line is there.
What can lead to any kind of improvement, if at all, Mr. Singh, in the domestic business? Because, I mean, the Kharif season sowing looked okay. Can other segments chip in right now, or is it difficult to say that?
Actually, everybody in CV market, commercial vehicle market, people are waiting for policies, in a budget, the upcoming budget. And from 1st of April, people are hopeful for the new scrapping policy also, which can give some kickstart or improvement in the CV market.
My final question then, Mr. Singh, in light of what's happened, are there any numbers that people can work with? You now at the end of we've ended quarter 3, so you have a 9-month picture of what GNA has done. What do you expect to end the year with, sir?
We are still after completing third quarter, so overall we are 6% plus, and we are hopeful we will close this year equivalent or slightly better than last year.
Slightly better than last year on the revenue front. On the bottom line front, sir?
Bottom line average out, we are hopeful it will be in the tune of 13.5 to 14.5%.
Okay, we wish you all the best. I understand these are difficult times. I only hope that they end sooner rather than later, Mr. Singh. Thank you so much for speaking to us
today. Thank you very much.
That's GNA Axle, and not the prettiest of quarters. And the management being candid about it, the stock is down 11%. We need to slip into a break. Come back with a conversation with Dinanath, Dubhashi, the MD and CEO of L&T Finance Holdings, which also came out a slightly skittish quarter. The management will speak to us on the other side. Stay tuned.
Tagore University, formerly known as ISECT University, the pioneers in skill development with focus on creating industry-ready professionals. Join India's premier skill-based university, Rabindranath Tagore University. Rabindranath Tagore University, formerly known as ISECT University, the pioneers in skill development with focus on creating industry-ready professionals. Join India's premier skill-based university, Rabindranath Tagore University.
L&T Finance reported stable set of earnings with its net profit coming in at 591 crores versus about 580 crores on a YOY basis. The company has been on a fundraising spree mainly to change its funding basket. So the management is here with us to talk to us about how the quarter went by and also what impact did it see on the margins front and also on the funding profile because of all these activities undertaken. Mr. Dubhashi, so could you walk us through the main highlights of the quarter? How did it pan out for you this time around?
Surely. This quarter's results, I will just try and put it in perspective. The most important perspective is that this quarter is another step in our ability to deliver assurance, in our ability, in our quest of delivering a steady performance, however turbulent the times may be. In good times, obviously, the performance will be steady and good, but even the turbulent times, which have been there for the last 5 quarters at least, we have always delivered a steady performance in terms of margins, market share, credit cost, GNPAs, portfolio quality, and obviously top quartile ROE. So this quarter to be seen as another step or another proof of our ability to deliver that. So that is number one. Number two, very important one, is this quarter has further accentuated the trend, not only for us, but for all our peers, quality peers, is that out of the difficulties among the NBFC sector, very clearly distinguishing has been done for top-rated NBFCs belonging to good parents, of good parentage. And that trend has been seen for the last couple of quarters, but last quarter that was a very accentuated trend, and we raised our almost highest ever quarterly funds raised around close to 10,500 crores. The important thing is these are all long terms. They have reduced our CP borrowing from 16% to 9%. Even if the ALM can take more, but at this point of time, it is better to be safe. More importantly, these long-term funds are from a diverse sources. They are from private placement of NCD, public NCDs, ECBs, PSL loans, bank borrowings. So all sources they have been raised. And last but not the least, while moving so substantially to long-term funds, the cost of funds has actually come down sequentially from 8.61 to 8.54. So that's the second message that is very, very important in this quarter's result. The third message, which is very important in terms of disbursement growth, is across industries, we have followed our strategy of either following the market, improving our competitive position, or maintaining the competitive position, or improving it market by market. We don't look for aggressive growth when the market is going down, because that will be toxic. That growth will be toxic. But the growth has kept in pace or even bettered the market in industries where we want to grow, industries where we want to moderate, like real estate. We have been able to further improve the quality of disbursement, going to bigger and better developers. So across the disbursements that we have done have been in keeping with that strategy of doing better than the market when the market is not doing so well. And last but not the least, the disbursement degrowth that you see is not because no longer because of any fund availability or anything like that. It is a part of market growth or of our strategy. We can now confidently state that any amount of funds that will be available required for our growth is now available and not only available but available at the right cost. So these three would be the big messages of this quarter results.
Okay, so when I look at the breakup of your disbursements, in the infra book is obviously down, and the housing finance book is also down by about 14% on a YOY basis, but stable on a sequential basis. So one key positive that I see is that in the rural financing book, your disbursements on a sequential basis are up by almost good 800 crores. It's down YOY basis, but it's up on a sequential basis. So are you seeing any signs of green shoots appearing in the rural economy and to the areas that you cater to?
Definitely, but first I would like to clarify something. In rural, sequential from Q3 to Q2 should never be measured, because in India, rural really picks up in Q3. So it will always be very smart growth from Q2 to Q3. So I don't want to claim credit there, because Q4 will be lower than Q3. I can tell you today. That's the seasonality of the Indian rural market. So that's important. What is to be seen is the various segments within this and also YOY growth. So very clearly tractors saw a very good growth in the market itself. The growth is still not positive over last year, but the degrowth in the market was way lower. We saw very good market pickup during the festive season. We took full advantage of that, and we actually showed our best ever disbursements in tractors. We clearly see green shoots there. Good Kharif crop, signs of excellent Rabi crop, very good reservoir levels. I mean, the reservoir levels are some 27% or so higher than long-term averages. So very clearly there will be recovery. We believe that next year will be positive growth for tractor market, and we have built now formidable strengths in terms of network, in terms of digital data analytics for taking increasing our market share next year. So that's what the tractor market speaks about. Two-wheeler is another story. We are making the transition, the market is making transition from BS4 to BS6 on 1st of April, and right now the market is a little bit in that confusion that whether BS4 should be pushed, BS6 should be pushed, and we believe that the negative growth in two-wheeler market will continue for a couple of quarters more. Microloans, of course, the demand will always be there. It is a matter of our own strategy, our own data analytics as to where all we should grow. So we are growing less in the eastern and southern parts of the country, and we are opening up new areas in the northern part of the country. And the overall growth will be just a function of this. We don't go for thinking I want to grow so much and then put targets for states. It is always bottom up. We do deep data analytics and see where we should grow how much, and then the growth comes. So that explains rural. As you rightly said, real estate we are very circumspect, but within housing, salaried housing has grown by mid 20%. So very well it is doing. Infra will always be lumpy. I mean, one big disbursement not happening last quarter, happening in fourth quarter will push up disbursement growth. So we need not read any trends in infra.
Okay, so I want to dwell a bit more about infra book, because rural book you've already elaborated. On the infrastructure side, government has been taking a couple of measures. One was with regards to the arbitration claims settling down and the companies being repaid. So are you seeing any signs of revival happening there? And I see that you're also into power transmission, and a lot of focus and a lot of talks are there that ahead of the budget there are a lot of expectations going up that perhaps a lot will be done on the power sector side. We've already seen some steps being taken by the government in last couple of months, be it the letter of credit mechanism and and the Uday scheme being revamped. So what are your inputs, or what are your observations on ground, and what is it that you would like to see in the upcoming budget on the infra side?
Definitely. I think there is no question that the government has taken a lot of measures, has made very far-reaching or other very over the next 3 to 4 years, 5 years, what is going to be the investment pattern. It has made the national infrastructure path. It's quite positive for the overall infrastructure sector. The government policies, there is no doubt about that. Sector by sector, good things are happening. Private sector investment should increase, and with that our scope should increase. We are doing two things. Okay, we can't only depend on the government, so we remain very focused on our focus sectors of renewables, operating roads, and distribution, power distribution, transmission, not distribution, transmission, and we believe that excellent scope of growth is there. Even in the short term, in Q4 itself, we have an excellent disbursement pipeline, and we believe that good growth will be seen in the infra book in Q4 itself. We are also doing something else. We are looking at new areas, like something like city gas distribution is a very interesting area. It is infra also, and at the same time retail also. That you support a city gas distributor who gets a license for a particular area. Like in Mumbai there is Mahanagar Gas, or in Delhi there is Indraprastha Gas. Like that, various areas in the country are going for piped natural gas, and also the auto fuel gas, compressed natural gas, and that is an 8-year monopoly is given to a particular player with a license, and we believe that it's a great area to lend, very safe, as the pay-in comes in a escrow from retail players, and we can have access to that escrow. So various new areas of infra are also coming up. So our strength in infra, our strength in understanding new models, studying them and taking leadership in them, we are very, very positive on the infrastructure lending opportunities in our core areas as we go ahead.
So that's quite interesting. Just one last question. Your provisioning in the quarter has gone up by about 73% on a YOY basis to 590 crores. And I see from a brokerage note that the macro-prudential provisions are to the tune of 350 crores. So what is it that you anticipate in terms of asset quality going ahead? And in this quarter itself, did you see any pain coming by?
Okay, so asset quality is actually quite steady. In fact, improved from last year, improved from last quarter in terms of net stage 3. Provision coverage has gone up. So asset quality is very steady. As you rightly said, the credit cost has gone up over last year. There are two major reasons. One, Assam in microloans. Assam is an area where we are seeing some disturbances. In fact, we saw it very early, about 9 months back we saw it. The disturbances started being talked about only in last quarter, but we saw it last 9 months back. As an example, in Q1 of or Q4 of Q4 of last year, our monthly disbursement in Assam was more than 200 crores, and in quarterly disbursement in Assam was about 200 crores, whereas our quarterly disbursements has come to some 15-16 crores this quarter, and every every quarter it has reduced from 200 to 160 to 80 to 18. So our early warning signal has shown it, and our portfolio in Assam is quite in control. But we have prudentially, like we had taken in Orissa a year back, prudentially taken close to 100 crore provision in Assam, out of which close to 70 crores is standard asset provision. They are not NPAs. We have taken standard asset provision just to be ready if any problem happens in Assam. So that's one of the major explanation of the increase in credit cost. In a way, it is macroprudential because those are not NPAs, those are standard assets, and we have already taken provisions like we always do. We never like to give shocks. This is where the steadiness comes from, that when we see early signs, we just take provision. That headache is over. Now we will concentrate on recovery.
All right, Mr. Dubhashi, thank you so much for joining us and all the best for the quarters to come, sir.